Hello, I'm Rusty Tweed, the president of TaxGuard 1031. Today we're going to be talking about capital gains taxes and an often overlooked area of taxation called depreciation and what happens if you don't do a 1031 exchange. So let's take the example of an apartment building that was bought 20 years ago for $1 million. That $1 million original purchase price is what we call the basis, and that's where we calculate capital gains tax from. So this property goes up in value and today it's worth $3 million. So from the original $1 million basis, it's now worth $3 million, and that gives us a $2 million capital gain. I think everybody can understand that. But that huge area that people often overlook is called depreciation. Now, when you have an apartment building, you're actually writing off a value of that property every year against your taxes, and that's what we call depreciation. Now, we've made this very simple. To get exact numbers, you should definitely talk to your own CPA. But in this case, we said that over 20 years, you've taken $600,000 of depreciation. What that means is you've written off $600,000 in your tax return over that 20-year period, and you've lowered your basis from the original $1 million down to $400,000, which means you have an additional tax to pay on that $600,000. So again, $2 million gain, you pay the federal taxes at 20%, $400,000. Now, the $600,000 of depreciation, which we call depreciation recapture tax, is at 25%, which in this scenario is $150,000. On top of that, we're in California. So now we have to pay the tax rate that we have the honor of paying here in California, 14.63%. And in addition to that, this year, we now have the Obamacare tax kicking in, which if you make over $250,000 is another 3.8%. So in this case, that $2 million gain turns into almost $1 million of taxes, and you're left with $2 million. To recap this, you've got the tax on the capital gains on the $2 million. You've got the much overlooked tax of depreciation recapture. And then you have the California tax, which is on the whole $2.6 million. And again, you have the Obamacare tax, which again is on the whole $2.6 million. So on a $3 million property sale in this case, you're going to pay close to $1 million in taxes. And that's why people want to look at doing 1031 exchanges.